The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As we start off the day, as always, what do we like to do? Well, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we got? Well, we got down to 2450 on the S&P cash. Volume wasn't very exciting the first 30, 45 minutes, so we'll keep an eye on that. But, you know, you got what, 1.75 billion shares, so there's not a lot of volume on the downside today. We're just off 1 point. Again, I said there's probably not going to be a lot of movement other than short squeezes. We'll talk about one in particular that worked out fairly well for those people on the short squeeze side. Other than that, there just isn't a lot moving the markets until we probably get into either tomorrow night, more likely, I suspect, by Thursday night. We've got a lot of action going with undercurrents with the expiration on Friday for the monthly options. But they all say that, kind of like I said last week, they're, 2450, probably about where we close. Now, there may be a big surprise. No one knows what everybody's going to say on earnings on Thursday, but the market pretty much shrugged off political news today. It's been divorced from that. The only thing that seems to be moving with politics is the dollar. Even gold probably should have been up much more significantly with a pullback in the dollar, but it's kind of slowly moving. I have a theory on that. Maybe we'll get to it. But other than that, just a very quiet market, and there's a lot of old chestnuts that have been around in the stock market. One of them is don't be short a quiet market, and I suspect that's kind of what we're looking at right now, is you probably don't want to be too short a quiet market as we go through the day. Anyway, that's it. We'll move along, but just kind of a quiet market. Of course, Dow down worse than everything else, but for an index, of course, it's not a very good index. It's only 30 stocks. Statistically, if you're looking at the broader market, you would need to have somewhere around, depending on your level of confidence, somewhere around 330 to 375 stocks. That's why pretty much the only thing I spend a lot of time looking at is the S&P 500 and the New York Stock Exchange the full 2,750 stocks or whatever it is on the NYSE. If not, it's like asking two people who's going to be the next president and just assuming that's a great poll. It's not. You've got too few samples, and it's no better than going to a witch doctor for medicine. It's just not going to tell you anything, and a waste of your time for the most part. But it is interesting to watch the Dow and how they manipulate it, since it gets reported on TV. Kind of an easy way to manipulate the markets. But that's it. Anyway, sideways market without a lot of stuff going on other than the traditional stuff. As always, we like to start off with a little bit of history.
That it's all just a little bit of history repeating.
And on today, in 64 AD, yes, there's no digits before that. This is, I think, about as far back as I've gone back in history. But one of the biggest cases of fake news, and CNN wasn't anywhere around. Amazing. Anyway, the great fire of Rome breaks out and destroys much of the city on this day in the year 64. Despite the well-known stories, there's no evidence that Roman Emperor Nero either started a fire or played a fiddle while it burned. Still, he did use the disaster to further his political agenda, so maybe he's related to the mayor of Chicago, for those people on the inside. Again, the fiddle wasn't actually developed for another 4 years. He did play a lyre, which is kind of very much like a harp. He often composed his own music. He was 35 miles away when it actually broke out. And, of course, probably in 35 miles in that in 64 AD, probably didn't take a airliner over there, start the fire, and then run back. But that was about it. He had a place made all out of stone. It's one of the last places there. He stayed outside of the city and actually let his palace be used as a shelter for several months until people started rebuilding their places. But I thought it was just kind of interesting that there were so many things that we think we know about Nero and almost all of them wrong. That was because, of course, after he died, a lot of people that didn't like him got to write the history. Unknown to them, though, many other people wrote their history too, and it was pretty easy to, by even now, to check the facts and find out it was fake news. So if you think anything's new, it's been around forever. Okay, what else do we have? Oh, got more things to talk about here today. We were talking about if you're really trying to look at anything that's going to make money, a great deal of it is going to have to be because of a short squeeze. And we have one of the best operations and manipulations of stock ever in one called Restoration Hardware. Let me get that up here for a second. It had almost 13 million shares short. This equates to almost 87% of the float and 45% of the total shares outstanding. Restoration Hardware just engineered a giant short squeeze on their own stock. Restoration Hardware made $13 to $15 million in profit in all of the second quarter, yet it bought back $700 million worth of stock to create this. And this is what I'm saying, that for the most part, not a lot of movement is expected in this market, at least for my model. But one thing that you can see is that especially in quiet markets, you will see when the cat is away, the mice will play. And a beautiful short squeeze. Some stocks have little to do with the underlying future of the company, and a lot more, at least in the short time, and how far that they can push a stock. Everybody keeps shorting this thing, so I don't know if it's done. But since back there at $41, they have bought a whale of amount of shares, and this looks just a little too good. I don't think the CEO was as sharp, but I suspect he bumped into somebody on Wall Street that was, and said, we can make a ton of cash on a share buyback. And this is done to a T. I have to give a golf clap to the people behind this thimblewig, as they call it.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, there's a few websites that I check out for short squeeze information. One's called shortsqueeze.com. You can look at individual stocks there sometimes. There's a handful of others. If you just Google short squeeze, you'll find a lot of stuff out there. But if you want to pay for it, there's services that go through a lot of it. Anyway, just a thought out there. As I said, I'm not looking for a lot of action in the S&Ps and kind of a sideways market, probably through Thursday. I think by Friday, we'll have enough earnings that people will figure out that probably pricing these stocks going into earnings for the absolute perfection, probably not the best deal. And what do you have? Netflix is probably the only outside one at the moment. Where's my thing here? There it is. What else do we have? Okay, Goldman Sachs is off 2.5%. Lockheed Martin off 0.75%. We've got a few more here. Harley Davidson's off 7%. We've got PBYI, which is, I think, Puma Tech. They had a breast cancer drug that went through, got FDA approval, up 8.5%. J&J off, or actually up almost 2%. SAN is off 1% after some fairly damning articles. This may have been out for a while, but I thought it was very interesting. But apparently this is the bag holder for all those subprime loans in the car industry, which are now starting to proverbially hit the fan, if you know what I'm talking about. And of course, I couldn't find my my sound effect here. Maybe I've got it. Maybe I don't. I can't find it. Thought I had it on here. Yeah, I was going to play the toilet flushing, but CMG is off. what happened here? Oh, there it is. Off 6.5%. They've had to close a store again for the norovirus issue. And one person I read just a few minutes ago, is very sick and may not make it. So we might actually have deaths in here. Anyway, 6.5% with the food with integrity and a lot of extra germs, apparently. And this one continues. And, of course, just a couple of days after a massive upgrade telling everybody that this was going to the moon. So that's it. What else do we have going on out here? We're getting into earnings. Of course, today we had Bank of America, Goldman Sachs, Johnson & Johnson, United Health, Lockheed Martin, Harley-Davidson. And I think after the bell is IBM and CSX. I don't think CSX came out already, did it? We'll take a quick look at. Yeah, it's flat. I think it's after the bell. And do we have IBM? I think that's farther down my list of stocks. Okay, so it's off. That's IBB. IBM, okay, it's up 45 cents at 153.41, and this thing's been going sideways forever. So we're going to get a little. I don't think IBM's going to be a big surprise. As I said, I'm doing this big hootenanny on the 26th, the next wild, wild west of computing, all about machine learning. It will be a big presentation that I've spent a lot of time putting together in glorious HD, but it will have just about everything you need to know about investing, and along with a brief understanding of what actually machine learning is and why it's going to be different. IBM is one of the more interesting companies in that they are kind of going their own way, both in hardware and software, where everybody else is kind of doing the same thing. And we'll explain it more in that presentation on the premiering on the 26th on most of TFNN.com, if you're a subscriber, that is. Then we get into, of course, tomorrow, Morgan Stanley, Textron, Qualcomm, American Express, Alcoa, and United Rentals. Thursday, we have Abbott Labs, BB&T, Checkpoint, Philip Morris, Snap-on, Union Pacific, Genuine Parts Company, Polaris, Microsoft, Visa, Skyworks Solutions, Intuitive Surgical, eBay, Capital One, Athena Health, and SAP. So we're going to have a smattering of tech stocks this week, pretty much through the financials by Friday. And then we get into General Electric, which actually has a very interesting new system for power generation. Normally, everybody uses steam, but they have a system that will be about 10% more efficient using basically soda water that's hypercritical, i.e. going from a gas to a solid, or a gas to a liquid, excuse me. Very interesting. So they're going to use soda water, and supposedly that's 10% better than probably drinking it, apparently, if you're Coca-Cola. I can't even say it. Schlumberger, of course, on Friday morning. Honeywell and Huntington Bank shares, although I don't think Huntington's big enough to change anything in the financial community. We've had kind of a little disappointment right on, and even a little bit of upside in the financials, and none of them have really performed spectacularly, let's put it that way. So kind of an interesting week firming up as we wait, of course, for a few more earnings, I think, and then we're probably going to have some kind of decision in this market as to which way this goes. Off less than a point on the S&P cash right now, volume 1.83 billion shares on the NYSE, so pretty quiet. Not on a lot else to do other than say it's a mad market. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, and, of course, post a message in the den. What else do we have out here? Oh, I got to get my charts back up. I wanted to look at a few of those. Let's take a look at CMG real quick. Well, we're certainly down. We've got the volume. You've got 352.96 as the last recent low out here on November 1st of 2016. Let's go back a little farther out here, farther. That's kind of it, 252.96, the November 1st low. You've got a higher low out here on December 7th, which is a day that will live in infamy, and a day that we're testing today. You had 5 million shares that day. You got 6 million shares already, so you broke that. So you are down to the 252.96 from November 1st, 2016, a day that will not live in infamy, not like December 7th. And what else do we have out here as I look at a lot of other stuff? Let's take a quick look at CSX as it comes into earnings. We will join you again shortly. Look at this. Not a lot in this. Coming up on it. This thing's done well. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Someone brought up, there's not much out here to look in CSX. These things have been holding up well. But we were talking about Amazon in the den during the break. I just think I would bring this up. This is the poster child for the Sherman Antitrust Act, which I think is 1884, 1887, something like that. Really to combat the railroads and their ability to shut people in and out of business. There were a lot of shenanigans going on back then. And of course, it really got used big time in the about 1903 to about 1908, when Jay Gould and a handful of the other big titans of Wall Street were all trying to bid on the last little section of railroad. I think the other guy was Harriman. In fact, I've got the book on the whole thing. I read it. May need to read it again. Very interesting time in the stock market to see what big manipulators can do. But I tried to get a professor who's a specialist in this on the air. He didn't want to come on because he was afraid that anything he said might cut him out of some big fees one day as a contributor when this stuff gets going. But amazingly enough, it's only about half the time that someone tries to form a monopoly and hold the price up. Generally, or at least half the time, antitrust action comes from people artificially holding the price down and making sure that no one could ever come in back behind them. If you're first, you make a lot of cash, you pay off all your big capital expenses, and then you lower the price because everything's paid off for, and then no one can come in and compete against you. And would the prices go down if there were more people there? They may actually even go up. But again, with no competition, what happens? There's no reason to actually make a product any better if you hold the monopoly. And all you have to do is hold the price down. Then that means you don't need to do a lot of R&D. Eventually, 50 years down the road, maybe you blow up your company, or maybe someone gets a newer, better product that doesn't have the limitations. But Amazon, kind of the poster child for this stuff. And again, they have a history of fixing prices in books and other things. So just about everything you would look for in a case as a Department of Justice person looking at this, you've got. The downside, of course, is he owns his own newspaper and he can smear you at his will. I'm talking about Jeff Bezos. Whether he would or not, we will not know unless it goes forward. But if you're a big magnet, you want to go all Citizen Kane on him, it is certainly possible for Jeff Bezos. But he's not helping his case. Every time we turn around, we see that all he has to do is announce that he's going to open something up or even file a copyright for something, and he can decimate another business. That is the definition of a inherent monopoly. But we'll move on. Congressional hearings on the WFC. Is it WFC? That's Wells Fargo. What is the other one? I think he put it up here. Doesn't matter. We'll look at Wells Fargo. Somebody asked me about this, and this is the same thing. We talked about this in gold, which is these big triangle patterns of lower highs and higher lows setting up. And you just kind of got it a little bit in Wells Fargo. But my guess is that we've got a great deal more doing the same kind of thing. Let's go and look at a few others out here. We looked at CMG. Let's look at the SAN. Very interesting article I saw this morning on, I think, Yahoo Finance. And this thing has been moving up, but apparently the whole issue that no one learned from in 2008 of taking bad mortgages and putting them all together and then selling them has come back to haunt us once again. The Banco Santa area, never heard it pronounced. Whatever it is, Banco Santa, yeah. SAN is the symbol. Apparently, these guys went hog about 6 months ago, and they specialize to a great deal to south of the border immigrants and selling them cars. A lot of them, of course, not citizens of the United States. They've decided to amscray and leave a lot of these cars around. There was a massive move upward in the delinquent loans. In fact, a lot of them have just turned their cars back in and gone south of the border again, leaving whoever this company packaged these loans up and sold them to as the bag holder. Maybe that's good, maybe that's bad. I don't know exactly if since we don't get to see the contracts on the opposite side of it. But a very interesting move. But over the last month, they've almost doubled. So there's been a huge move in the subprime, not car, what would you call it? Car loan market. I want to keep saying mortgage market. But I did get some numbers on it, which are very interesting. And that is the automobile lending market is 1/10 the size of the housing market. So that may give you some perspective. But when we look at some of the reasons why, I think we had a phone call last week about AutoZone or one of the other, I think it was AutoZone. And I said, I just didn't see a lot in this until we got a test of $500. And actually, we came very close to that today. October 15th, 491.93. That's of 2014. We got to a 492.02 today, or actually just a couple of days ago. So you got the test. Volume was double. So that's not a good sign. Energy off the top was also very good. I think during our discussion with the caller, I was saying this thing probably needs to go sideways a little while to consolidate at best. You've got the worst of both worlds, energy on the way down and higher volume compared to the previous low. And it may be because a lot of these newer cars are now kind of making the circuit and helping out a lot of people, since newer cars need fewer prices. Was that it? O-R-L-Y. O-R-L-Y. Was that the one I was talking about last week? Can't remember. Nice little bounce in that one. Let's take a longer look in O'Reilly. But even the users of older cars apparently have vamoosed a great deal, and just not going to the auto parts store as much as they used to. Nice bounce in O'Reilly off this recent low of June 10th, but nothing to write home about. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And maybe we had somebody come in late for the party, but CMG norovirus. Someone might even die. So not a good thing for CMG. They're having a bad taco day. What else do we have out here? I wanted to look at a few others. We were looking at hog. Did not do well. Heavy volume blew through the lows. Very interesting on this one because it has a tendency to go fairly well with gas prices. This one's bucking that trend and has for a while. You got back up to 63.40, but I didn't really understand why back on March 16th. This is back through the previous low. It went through the previous gap up and sign of strength on October 18th. It had 7.6 million shares. We're through that with 15 million shares. Now it's kind of probably base out here somewhere around 48 million shares. $48. Your next low is 45, and the next one after that is $40.56 back on June 27th, 2016. This is the second big gap down in this one. You're probably looking for one more big gap down as a third gap play in Harley-Davidson. And again, I would not be surprised if that came in and settled somewhere around that $41 or $42 range as you have a couple open double gaps at that level. So what else do we have going on here? I want to look at some others. I want to look at Polaris, which is kind of let's call it a similar stock. This one not doing much, man. Talk about a range-bound stock. This thing has been making, with rare occasions, and this thing is stuck at 90, isn't it? Don't get a read from that. To take a quick look at Netflix in FLX. We'll look at that. It looks exactly like you think it would. Now, this is the third gap and a big gap play. I would probably like to see the one at 135 a little stronger, but kind of looks like it. Let's go back a little farther. You may even be able to say, you had three gaps in this one. One time it paid off big on this one, but this one has not really given any signals to pull the trigger. But you've got three big gaps going all the way back to $50. Could those ever get filled? I think the answer is yes. There's nothing really that is a big moat for these companies. And there's always the run where you get a bunch of bad movies. In the case of Netflix, probably a lot of bad series all in a row. Media companies, especially film companies and television companies, tend to get a much lower multiple than, we'll say, things like tech stocks. The reason why is they do have tend to have long reigns of successes and then big runs of failures too. I just don't understand the idea that this company has a giant moat. It may have some good properties, but generally these tend to fade. I don't see that there's any reason to think that they are fading right now. But in the near future, if we start seeing some real stinkers come out and Orange is the New Black goes away and maybe some of the other ones that are the big draws for Netflix, maybe we'll see some other things. A couple of them haven't seemed to do that well lately. But again, the idea that you have to have Netflix, I don't know. I have a feeling that the tide will come in and out on these several times. Okay. So what else do we have? Take a quick look at Goldman Sachs. This stock kind of down for one big reason, and that wasn't the numbers that they produced, but they did not have an answer for why the money coming in from their bond trading has just absolutely been eviscerated. And I think it was down like maybe $45 billion worth of volume. I don't know what it actually was on the line. I was listening to the kind of in the background, the earnings call, and 2 or 3 times people would ask what the deal was on bonds and the bond trading revenue, and you never got a good answer on it. And I think it wasn't the numbers in total. It was the fact that they wouldn't give a good answer on why their bond money, trading money, is so lackluster. And maybe if I knew more about bonds, I'm not a big bond guy, other than James Bond. But this is back down to this gap up on the 3rd. So it's not the end of the world, but you are picking up some decent volume on the downside. And, of course, price for perfection, you better provide perfection. Numbers weren't that bad, actually probably fairly good other than that. Maybe the dollar coming down, signaling that there won't be higher interest rates, and that maybe they won't be able to get their beak wet in that market too. What about Disney? Take a look. I know Disneyland opened up yesterday in 1955. We had technical difficulties, or that would have been my history for the day. I think Disney, it's the question of whether or not you have any growth, not whether or not they've got a good stable of products in the back. But, I think the biggest thing Disney has going against it in the near future, well, 2 things. ESPN continues to see that its ratings dive, and, of course, with cord cutters, they don't get that juice either. The other side of that is the whole Star Wars thing, where they've had to replace the director midstream. Now, it is going to be, what's the guy from Happy Days? God, I can't even imagine that I could forget him. I met him. Oh, I'll think about him in a minute. I'm just have mental. Yeah, Ron Howard. I've got the picture over here hanging on the wall of me working on Apollo 13. I couldn't remember his name. But we've got him coming in to try to fix this movie where you had 2 really good movie directors get canned out of it. And that always tells me one thing, or mostly tells me, and that is that these movies tend to flop rather big at some time. And they flop big because, of course, the corporate types can't keep their big noses out of the creative types, which is one of the reasons Netflix has done so well. So I think they have two problems. One, they hired two very good directors to work on it, and they had to get rid of them because, of course, they didn't like whatever they were doing. But the guys have a solid track record. So I suspect it's more of the people in the office than the movie itself. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Talking about movies, I forgot to bring up, but probably the best movie of this year is going to come out on Friday. It's Dunkirk. And, a lot of movies you come and go and you see them. This one is up there with Private Ryan. A few of the other Spielberg movies of all time. And, of course, if you loved some of the movies that this guy has made before, I think you will really like them. It's got a lot of great people. It's told from I guess the perspective of land, sea, and air. also and very good. And of course, it just you can't. Other than the last movie, which kind of was disappointing, but he made Inception, and if you haven't ever seen his first movie, if you want your brains splattered all over the wall, and you thought Inception was a great movie, you got to see this movie called Memento. If you got to find it, I don't know where you can find it, but that was his first movie. And if you thought Inception went in and scrambled your brains and you were trying to figure and follow where you were going, Memento is a great, absolute great movie about a guy who every time he goes to sleep forgets everything he knew. And I'll leave it at that. But I think if you liked Inception, I think it's even better than Inception, probably because it was a low budget movie and he had to kind of work on the script a little bit more and not that many special effects. But an excellent movie. I think it was 1999 or something. But look that one up. It's called Memento. And very interesting. Okay, so we're done talking about media companies for a minute. But what else do we have? Well, let's go back here and look at the markets real quick. I think we've got just a couple of minutes left. Memento. I will find the link and post it, or you can always email me, and we will find it. Let's see. $2,000. Okay. Guy Pearce. You'll recognize the guy when you see him. But excellent. Excellent movie. 94 on Rotten Tomatoes. I thought maybe it was even a little better. But this movie probably even better than that one. But I still, if you like that Inception kind of movie, pretty good. Okay, so let's go back and look at the S&Ps. So we're still off, half a point. Volume's just 2 billion shares. So up on light volume, down on low volume. And what do they say? And said forever, and that is do not be short a quiet market. We'll take a look and see what happens in this, but it continues to be problematic. And just watch out, because a lot of these stocks that are significantly short could move like Restoration Hardware. And I think that's my poster child for making money. You're going to have to be in on one of those. I don't see a lot to the upside. At the same time, it doesn't seem like anybody's willing to sell either, even on some of these disappointing earnings. But we're going to get 2 more good days of earnings, and that's going to tell us a lot more about the way the market's going to break. But I think they're going to wait and go through that. I think at best tomorrow at the close, probably more likely Thursday or maybe even Friday before we bust out of this range. This doesn't look like there's any impotence to go higher, and probably not a lot to go lower. After the bell, IBM, and of course the next 2 hours, Tom O'Brien, and then Andy Heck. See you tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.